bring in Chris Toomey of Morgan Stanley Private Wealth Management. What are you telling your clients? Thank you for being here, by the way.
Thanks for having me.
What are you telling them?
We're telling them this is why we've been so defensive. I think in our mind, we were really concerned about a lot of different issues that we think were going to push that PE multiple down. We saw this affect P, and we think we've seen kind of the first phase of this, right? We saw a situation where prices have come down. What's interesting is you're starting to see that kind of first level of group that would be affected by tariffs, and they've come down. Now we're really getting into that second level with regards to the knock-on effects of this. We've seen GDP growth starting to come down, inflation numbers picking up, consumer confidence coming down, CapEx is coming down. We're starting to enter into that earnings period. We're now concerned about that E part of the PE.
What do you do when they say, but yeah, Chris, Trump likes the stock market. He's not going to tolerate this for that much longer. And oh, by the way, the Fed, I've always believed in the Fed put. It's worked for me every time. Why is it going to work now?
I don't necessarily think the Fed put is going to be on the table for a little while. I think our concern is a lot of these actions are inflationary. And I think if you saw Powell's comments and you guys were just talking about that, I think he's still on hold. I think he's concerned with regards to what these actions are going to do with regards to inflation. A lot of the responses that companies can do in regards to dealing with these tariffs are going to increase prices, whether it's increasing prices to the underlying consumer or increasing prices with regards to how they manufacture these goods. And this idea of bringing manufacturing to the U.S. is great, but it's going to take time and it's very costly.
What if I said, well, I can make the argument that it's deflationary? You're hurting demand. You're crushing the psyche of the American consumer, the American CEO, and the American investor. Rates are going down at a fairly rapid clip. Why isn't this going to end up being the other way?
Because you're not going to see that economic activity pick up. You're not going to be in a situation where people are going to be wanting to buy goods. They're going to be wanting to hold on to things. So activity is going to come down. GDP is going to come down. Prices have to stay higher just because it costs more to produce them. So whether it's labor costs, whether it's actual costs of actually manufacturing them, all of those costs are going to stay higher, and it's going to reduce the ability for us to actually.
Okay, so you're talking about stagflation.
That's our concern. So if you're in a situation where we're going into a recession and the chairman of the Federal Reserve is saying, I'm not necessarily jumping in here and cutting rates.
Well, not today.
Yeah, but what's going to happen in the market for the next couple of weeks? In our mind, I think that still needs to be priced into the market. I still think you're in a situation where you now start having to move up the probability of recession.
People are.
And you're going to start to have to take those earnings expectations down.
People have.
And so if you're looking at that and you're saying, okay, if my earnings expectation is, let's say, going from 280 to 250, and I'm going to put 18 on that, you're talking about kind of a 4,700 on the S&P 500.
Okay, I read through a bunch of different scenarios like that. I use the Goldman number because that's, a lot of people use that number. From 280 to 269. You don't even believe the 269. You think earnings need expectations for next year are that dramatically high? Because from 269 from 280 to 250 is a big come down there.
Yeah, so if you're at 280 and you come down to 250 and you apply an 18 times on that, and if you look at 26 and you move that back up to 280, you apply 20, that 4,700 becomes an interesting area. And that's also an area from a technical standpoint where the 200 week is basically going to be. So in our mind, yeah, you're looking at some opportunities right now where stocks have sold off that are down 20, in some cases 30, 40, 50%, that are starting to look very attractive. But we're also starting to see those knock-on effects. You're talking about Mag 7. Mm-hmm. Yeah, these stocks are down dramatically. But what do you think is going to happen over the weekend? Where do you think Europe is going to come back like China did with regards to their tariffs? They're going to focus in on those Mag 7 companies, right? And those Mag 7 companies, where the S&P 500, 40% of the revenues come from overseas, the Mag 7, it's over 50%. So you could see downward pressure just because there's such a huge part of the market.
Okay, another client calls you and says, yeah, I hear you. It feels like garbage out there. But, Chris, what about tax cuts and the deregulation?
Yeah.
We know that's coming. What about that?
Well, the question is can we get there, right? I think we're in a situation right now where we used a lot of political capital with regards to these tariffs. The question is how well are we going to be able to get there if you've got a lot of congressmen in districts that have a lot of angry constituents with regards to the tariffs and say, before we start talking about tax cuts for the rich, let's start focusing in on jobs and getting these things going, because you're going to start to see companies in these earnings reports talk about hiring and talking about future projects, and they're going to be a lot more uncertainty about that, just like they are in the market right now.
Yeah, but I mean, the alternative is telling your constituents that, well, we're not renewing the tax cuts, so your tax rates are going to go up as you're already dealing with the ramifications of the tariffs. That doesn't sound very tenable in my mind.
No, I think we're in a situation where that was what everybody was expecting, right? And we talked about sequencing. What's going to come first? Is it going to be the tax cuts? Is it going to be the deregulation, M&A activity, all of these other things? But you're in a situation right now where consumer confidence has come down so much. Like, unless we deal with the tariffs, I don't know how you focus in on these tax cuts.
Well, you